Let me talk to you a little bit about why I'm long Teladoc in this scary it's a scary stock really. Let me just find my Teladoc thing. Well, I don't have it in front of me, so I'll do it from memory. So Teladoc is they have two businesses: an institutional business where they advise and do if you're in an emergency room in a rural area that doesn't have experts, they can have their doctors come in, look at things remotely, and help navigate a complex case. Um, then they also have Better Help, which is what most people are aware of when they think of Teladoc, which is teletherapy. Okay, well, the institutional business, the first part that is doing really well, and that's a big business and it does really well. The BetterHelp business is not doing very well. It's not doing well for a few reasons, but post pandemic things are declining. Um, some it's been very expensive to acquire patients. It's a very marketing intensive business, so they spend a lot to get a patient, and so it's declining. So you have a growth business combined with a declining business. The market generally, and I've seen this with a lot of businesses, generally look at those as one thing, and they look at it as a declining business and they say it's trouble. And on top of all of that, they have $1 billion worth of debt that's due next, I think, June. Okay, well, it's a convert that went wrong. So let's assume it's going to be converted for cash because it was done at, I don't know, $50 and the stock is five. I'm getting the numbers probably wrong, but it's about right. So, but they don't have $1 billion. So the equity holders are thinking, okay, well, I should get out of this because we have a declining business that doesn't look great, which we don't know how they're going to solve, and they have more debt than they can pay. They have about $750 million of cash. Um, and they owe $1 billion. That math doesn't make sense. Well, they're doing about $150 million of free cash flow a year, so they should be able to get to the $1 billion by then. Especially they can get lines of credit and the rest for a little bit more. Now, if you think that they're going to go bankrupt, yeah, you don't buy equity. I think that's what you don't do. The debt's currently trading at 96 cents on the dollar, so the bondholders or the debt holders aren't thinking, "Hey, I'm going to get put a whole bunch of stock." Debt holders really can't hold stock, most of them, so they don't want that anyway. So what's happened in previous cases? They just refinance it. They refinance it at a much higher rate than a convert would be, but they refinance at a higher rate and they buy themselves some time, or they sell themselves. They sell that piece of the business. Now, does someone want a declining business? Probably not. Does it make sense you know for an Amazon that wants to do more in healthcare, or a Teladoc or someone else to I'm sorry, a Hims to do that? Absolutely. But as I mentioned, there's a lot of hair on it. So if things are going well at your company, do you want to bring on what could be seen as a headache or drama? So maybe put that as a lesser of a chance. I think the refinancing is the big catalyst. But let's see how this quarter is. Quarter comes in horribly, or if they're all of a sudden free cash flow negative, you're going to get another chance to buy it. I still think that they'll be able to refinance. Um, but that is something to be aware of. I think it's a good I think it's at least a triple based on the base business, the institutional business being worth three times as much as the current value, and nothing for the BetterHelp business. But I think the BetterHelp business is better than that. So I think it could be a really good, interesting, but very risky trade. I don't know what the
Could
stocks
they
the chart says to you, but
I think we talked about this the other day, that I like the fact that you have these up volume spikes, especially around earnings. So someone is saying, at least I don't want to be short, and maybe I want to be long. I want to see it above the 200 day here at 675 or so, and have this up volume versus down volume dynamic continue on the next earnings call. David, could they just shut down BetterHelp and take a charge and move on?
yeah, that's another option. It would be a shame. It would be a shame. I think before they do that, they'd go to United Health and say, "Hey, listen, you know, pennies on the dollar, please take this from us. Even if we get X, $100 million." I think that it's worth way more than that. Just for the access to the patients. So, I again, I may be wishful thinking on all of this. If the quarter's horrible, you'll be buying it at 250. So, but I
Yeah,
did
yeah,
meet
that's
with them at the I met with them at the Barclays conference about a month ago, a month and a half ago. The CEO who'd come in about a year and a bit ago seems reasonable. Sometimes you meet these CEOs and they're yahoos that you think, wow, I wouldn't trust with my money. Um, I don't generally trust a lot of CEOs from the reason of like they tend to be optimists. I thought he was pretty reasonable when he was describing the challenges. So I thought he was, you know, I think he's doing everything he can to work on this. So don't want to go as far as to say he's a good guy because I don't know if he's a good person or not. But I walked away very confident of management malfeasance isn't my worry. The worry is can he do something with this business, and I do think that they'll be able to do something. So let's talk about Teva. So what does the Teva
please.
chart look like to you, Kevin? Because they're doing everything right. I've held on to it. I sold a little bit just to take profits, and there's not a lot of. It's only execution at this point, and uh, I don't think there's too many upside surprises other than a launch 6 months or 9 months from now. But what is the chart? To me, it feels like people are just kind of going, okay, we know what it is, not too exciting anymore.
You were up what 20 to 37. So what is that? 60% in the span of 1, 2, 3 months. I mean that's a sprint, and now you rest and you do this consolidation between 28 and 37, and you do it the way I want to see it, which is I want to see the up volume days bigger than the low volume days, suggesting accumulation. And I think that's what you have. You can see these channel lines here between 28 and 37, and as long as it doesn't spend much time below 28, I think you're good, especially if you have earnings coming up in 6 days. You're going to learn a hell of a lot. And hopefully, they say something nice that either keeps you in the channel or breaks you above the 37 level. The launch you mentioned, is that a branded?
Yeah, it's a branded antipsychotic, so kind of a
Okay.
reformulation. So yeah, to me, you're at like 11 times 2026 earnings, less, 10 times 2027. It seems super reasonably priced for a generic. Um, so I mean, I'm sticking around it for now.
Yeah, I like it. I think it's very reasonable when you go up that much that fast to rest and consolidate, and that's what's going on, in my opinion.
Hi, I'm David Maris. If you like what you just heard, we've tracked every single pick we make on the show, every ticker, every thesis, every entry price, over 1,100 picks and counting. We put it together in a free report with our top 10 performers, the reasoning behind each one, and a preview of our full dashboard. If you want access, the link is in the description.